Have you ever wondered if you could retire early and live off your investment income? Well, what if we told you that it's possible by investing in dividend stocks? Stick around to find out how much money you need to make this dream a reality. Hey there, welcome back to our channel where we bring you the best financial advice to help you make the most of your money. If you're someone who's looking to achieve financial freedom, then you might have considered investing in dividend stocks. But the question is, how much money do you actually need to invest in order to live off the dividends? Well, in this video, we're going to answer that question and provide you with some real-world examples to help you get a better understanding of what it takes to live off your investments. So if you're ready to learn more, then let's dive right in. How dividends work. Now that we've established the importance of dividend investing, let's dive into how dividends work. Dividends are payments made by a corporation to its shareholders, typically in the form of cash or additional shares of stock. They are usually paid out quarterly, although some companies pay them annually or semi-annually. When a company earns a profit, it can choose to reinvest that money back into the business, pay off debts, or distribute the profits to shareholders in the form of dividends. Companies that pay dividends tend to be more mature and stable, as they have consistent cash flows and can afford to distribute some of their profits to investors. Let's take a real-world example to understand how dividends work. Coca-Cola, one of the largest beverage companies in the world, is known for paying consistent and increasing dividends to its shareholders. In 2023, Coca-Cola pays a quarterly dividend of 46 cents for their current share price, which equates to an annual dividend yield of around 3.07%. This means that if you owned 100 shares of Coca-Cola, you would receive $46 in dividends every quarter, or $184 annually. How much you need to live off dividends. Living off dividends can be a dream come true for many investors. However, the big question is, how much money do you need to live off dividends? This depends on several factors, including your lifestyle, spending habits, and investment goals. One of the most important factors to consider is your living expenses. This includes your mortgage or rent, utilities, food, insurance, and other bills. You should also factor in any potential unexpected expenses, such as medical bills or home repairs. It's also essential to consider your investment goals. Are you investing for long-term growth, or are you looking for more immediate returns? If you're investing for long-term growth, you may need to reinvest your dividends to maximize your earning potential. On the other hand, if you're looking for immediate returns, you may need to choose investments that pay higher dividends. To give you a better idea of how much money you need to live off dividends, let's look at some real-world examples. Suppose you're looking to retire early and live off dividends. In that case, you may need a substantial amount of money to generate enough income to support your lifestyle. For example, if you want to earn $50,000 per year from dividends and the average dividend yield is 3%, you would need to have $1,666,667 invested. On the other hand, if you're looking to supplement your income, you may need less money invested. Let's say you want to earn an extra $10,000 per year from dividends. If the average dividend yield is 3%, you would need to have $333,333 invested. How to invest in dividend stocks. Investing in dividend stocks can be a lucrative way to generate passive income. Here are some steps to follow when investing in dividend stocks. 1. Do your research. Before investing in any stock, it's important to research the company and its financials. Look for companies with a history of paying consistent dividends and a strong financial position. 2. Diversify your portfolio. It's important to diversify your portfolio to reduce risk. This means investing in a variety of companies across different sectors. 3. Consider dividend yield. The dividend yield is the amount of dividends paid out by a company relative to its stock price. A higher dividend yield can provide a higher income stream, but it's important to consider the company's financial health and ability to sustain the dividend payout. 4. reinvest dividends. Reinvesting dividends can help grow your portfolio over time. Many brokerages offer automatic reinvestments of dividends, which can help compound your investment returns. Risks and benefits of investing in dividend stocks. Now that we have discussed how dividends work and how to invest in dividend stocks, it's important to understand the risks and benefits associated with this type of investment. On one hand, investing in dividend stocks can be a great way to generate passive income and grow your wealth over time. Dividend-paying stocks are often from well-established companies with a history of stable earnings, which can provide a level of security for investors. On the other hand, investing in dividend stocks does come with risks. For one, dividend payments are not guaranteed and can fluctuate over time, especially if the company's earnings or financial health decline. Moreover, dividend-paying companies can sometimes prioritize paying dividends over investing in growth opportunities or paying down debt, which could hinder long-term growth prospects. Tips for investing in dividend stocks. Let's go ahead with some practical tips for investing in dividend stocks. 1. Research the company. Before investing in a dividend stock, it's important to research the company's financial health and stability. Look at the company's balance sheet, income statement, and cash flow statement to get an idea of their financial standing. 2. Check dividend yield. Dividend yield is the percentage of stock price that is paid out as dividends each year. Check the company's dividend yield to ensure it is competitive with similar companies in the same industry. 3. Look at dividend history. A company's dividend history is a good indicator of its stability and consistency. Look at the company's dividend payment history over the past several years to determine whether they have a good track record of paying consistent dividends. 4. Diversify your portfolio. Diversification is key to reducing risk in any investment portfolio. Invest in a variety of dividend stocks across different sectors and industries to spread out your risk. 5. Reinvest dividends. Instead of taking dividends as cash, consider reinvesting them to buy more shares of the company. This allows you to benefit from compound interest and increase your investment over time. For example, let's say you're interested in investing in the technology sector and are considering investing in Apple Inc., AAPL. After researching the company's financials, you notice that they have a healthy balance sheet and a history of consistent dividend payments. Apple's dividend yield is also competitive compared to other technology companies in the same industry. You decide to invest in Apple and also diversify your portfolio by investing in other dividend-paying technology companies like Microsoft, MSFT, or Intel, INTC. You reinvest your dividends to buy more shares of these companies, allowing you to benefit from compound interest and increase your investments over time. So to sum it up, investing in dividend stocks can be a smart way to build wealth and generate passive income over the long term. However, it is important to understand how dividends work, how much money is needed to live off of dividends, and the risks and benefits associated with dividend investing. If you're interested in investing in dividend stocks or have any questions about the topic, be sure to leave a comment below and join the conversation. And as always, don't forget to subscribe to our channel for more informative videos like this one. Happy investing!